Basic understanding of accounting. Accounting is a science that deals with recording, analyzing, and communicating transactions of a business entity with the aim of providing relevant information for interest parties so that they can make decisions. The basics of accounting are the basics related to the application of the science, which usually consists of equation, journaling, balance sheet creations, to the presentation of financial statement. The ultimate goal is to make reports related to financial condition as a basic for company decision making. Basic accounting equation. One part of accounting is the basic equation. This formula describes the company ownership and debts which are used to project a company capital. Usually, this component is expressed in the following form. In addition to the formula above, the basic accounting equation formula is as follows. From the equation above, it is shown that a company will obtain assets through the sum of liabilities and equity as a source of funding. According to the equation, the portion of liabilities is pledged before equity. This is because that company debt must be paid first to creditors in the event of a company going bankrupt. This one of the basic principles of accounting is that liabilities are more liquid than equity. Asset in accounting will usually always be linear with equity or liabilities, meaning that if a company asset increase, then both components will also increase in value so that the equation remains balanced and vice versa. Component is the accounting equation. After knowing the accounting equation formula, it is important for you to know what is in and where the components come from. Here is the explanation. 1. Asset or assets. Asset in the basic accounting equation formula are resources owned by the company and are useful for production activities and the sustainability of the company. Its from can be money or intangible objects such as copyright or patents. In addition, one of the assets that companies usually have is receivables, which is a general type of asset regarding assessment of payment promised from the recipients of service or product to the manufacturing company. Here are some examples of asset account. Current asset, prepaid expenses, receivable and cash, intangible asset, goodwill, access of payment over market value, patents and copyright, fixed asset, building, lands, facilities, production, machinery. 2. Liabilities or obligation. One part of the basic accounting equation formula is liabilities, which is a sum of loan funds from creditors that must be paid by the company according to the agreement. This component is the opposite of receivables and its recording must be done in the financial statement. Example of liabilities account are as follows: long-term debt, bonds, short-term debt, tax liabilities, unpaid employee salaries, trade payables, bank credit. Principles of financial accounting. When preparing financial reports, there are several basic principles that you must pay attention to, namely the following. 1. Full disclosure. The principles of full disclosure in accounting means that all figures in the financial assessment are in accordance with the actual fact without anything being covered up. 2. Principles of consistency. The next principle of financial accounting is consistency regarding reporting methods. If a company is going to change the method of presenting reports, that it must be accompanied by a strong reason. 3. Principles of business conduct. The basic accounting principles means that the preparation of reports must be based on the belief that the business will be run continuous on a ongoing basis. The best explanation of the basic concept of accounting along with example. After study this, it is hoped that you can prepare financial bookkeeping reports and various things related to financial properly and correctly.